What's up, people? So today I want to go over how to invest $100 right now. And as I went over in my steps to building wealth video, where you kind of need to be to start investing is you need to be tracking your spending, you need to know how much you're spending every month, and you need to make sure that you have an income to support that spending. And you need to have at least started building an emergency fund of 3 to 6 months of living expenses. So don't let that very last one deter you from investing $100. There's no better time to start investing than today. So what you need to do is you need to open a Robinhood account, and I'll probably put a link in the description. Robinhood is a stock market account or app that allows you to trade stocks without any fees. So if you have $100 to invest, you can buy a stock for $100 without worrying about trading fees. At any normal brokerage, you would pay probably at least $5. Fidelity charges $4.95. Vanguard, I think, charges $4.95. Merrill Lynch starts at $6.95, I think. So Robinhood allows you to start trading without any fees, so you can invest all of the money that you have available. So with that, you need to open a Robinhood account. You need to buy $100 worth of stocks. I'm suggesting Bank of America, ticker symbol is BAC, because they pay a decent dividend. They're a big bank, so there's fairly little risk. And you are probably interested in holding stocks long term, and Bank of America is going to be one of the more stable out there. The dividend is going to help you. And so with the initial $100, you can buy 3 shares of Bank of America right now, and you're going to basically hold that for a while. After that, you need to subscribe to the channel, and then you should ideally keep buying shares throughout the year. So as I said, Bank of America right now trades at about $30. So at any point where you have $30 laying around, you should put that on Robinhood. You should buy another share. Bank of America pays dividend every 3 months, and you could make the buying of more shares coincide with that. So anytime you get paid a dividend, you can deposit another $30, and then you can buy another share. So that way you have a fairly decent compounding effect going on from the very beginning. After that, you basically hold those shares for a long time and keep buying stuff throughout the year. Then you open a Roth IRA, and in April, you sell all your shares of Bank of America, and then you transfer the money to the Roth IRA before April 15th. Now, April 15th is the cutoff to where you can make contributions to a Roth IRA for the previous year. And IRA means individual retirement account, so you're going to transfer it to a retirement account, which then helps you with taxes. Not that you're really getting anything for that, especially not at $100. So that's going to be fairly insignificant at this point. But any money that you put into a Roth IRA grows tax-free for the rest of your life. So if you retire at 59 and a half, you can start pulling out money out of the Roth IRA, and you're not going to pay taxes on that because the money that you put in has already been through income tax. So before April 15th, you transfer the money to the Roth IRA as a contribution for the previous year, which is what you should be doing. And then you can put that money that you transferred on the tax return that you file also for the previous year. Then you buy an ETF, which stands for Exchange Traded Fund, or something like JP Morgan Chase. due to special tax rules, you cannot buy Bank of America if you just sold Bank of America. That's what's known as the wash sale rule, where the taxes get very complicated, and you probably don't want to mess with that right now. So, if you want to keep Bank of America, you would have to sell it before 30 days before buying it. So at least 31 days before you buy it in the Roth IRA, which again is possible. You can transfer the money to the Roth IRA and then just not do anything for 30 days and then buy Bank of America again. Again, keep those 30 days between the time you sell a stock and the time you buy the same stock. Buying different stocks is fine, buying funds is fine, buying index funds especially is no problem. So, you're going to pay at least $5, again with Fidelity it's $4.95 per trade in the Roth IRA, but I think that it's valuable long term to have the money in the Roth IRA to where in the end you don't pay taxes on that. Anything that you have in the Robinhood account, like say the Bank of America goes up 10% between the time that you first buy it and the time that you sell it to transfer the money into the Roth IRA, you're paying income tax on those gains. Again, the 10% on $100 would be $10, of which you pay maybe $2. So it's not going to impact you that much. You're going to still have $8 of gain right there. So it's a good thing if it goes up. If it doesn't, it's fine. It's not going to hurt you in any way. Just hold on to it, then sell it, transfer the money to the Roth IRA, and enjoy the free gains for the rest of the year. Now, I'm going to link my steps to building wealth right here. And make sure you watch that. Make sure you have a good understanding of all the things you need to do to get yourself into a good place where you can actually invest all the leftover money that you have at the end of the month. And make sure you just start building that emergency fund so that if you were to lose your job, you're not completely screwed.